So did you have a good weekend, Nick?
I did. I did. We didn't do very much. Fortunately, we moved back in May and we live on a little lake and we have a pool. And so my son is able to go out there and fish and swim, and hanging out at the house is not so bad. So
There you go. Yeah, I think everybody's finding a new reason to love their houses right now, right?
that's right. That's right. And if you don't like the one you've got, I know somebody you can call, right?
Yeah, exactly. Yeah, that's true. That's very true. Okay, and so tell everybody who you are. I'm here with Nick. Nick has been gracious enough to offer to come and do this with me. He is a professional. This is what he does. Tell everybody who you are and how long you've been doing this.
Sure. My name is Nick Toadvine. I'm a certified financial planner, and I've been, gosh, doing this over 20 years now. I think 22 years. It's all I've ever done. So I didn't change careers midway, and now I'm doing this. It's all I've ever done. So we work with individuals and families to with retirement planning, investment management, risk management, some businesses and municipalities as well. So um, we're here to answer any questions you have, and we'll go through some things today. And if you have questions later, of course, you can always type them in the comment box, and I'll do my best to answer them.
I'm going to do my best to watch the comments. If you have any questions about anything with your financial health right now, Nick's here. He's going to answer them for us. I think the biggest question I'm getting right now, I'm in that age group where we're monitoring our retirement,
Right,
and the biggest question I'm hearing in my circle is everybody's retirement accounts are kind of doing this.
right.
And they're asking, should I worry? Should I change where my money is? What advice would you give to people right now about their retirement accounts?
Sure. Well, with the retirement accounts, I would say just keep doing what you're doing. It's unnerving. We know the market moves around now. Um, Fortunately, for the last several years, it's been moving upwards, not straight up. I remember back at around Christmas time in 2018, we saw some dip, and then it bounced back pretty quickly. But keep doing what you're doing. Keep putting money away. I mean, if you need the money tomorrow, just for something, it shouldn't be in the market. But if it's money that's longer term money that you're like retirement money, and you're planning, 5, 10, 20 years down the road, and even when you retire, I mean, you're still going to live 20, 30 more years, right? So it's still long term money at that point.
Yeah.
Keep doing what you're doing. Things are on sale right now. I mean, the market went down a lot. It's bounced back some. I don't think that we're out of the woods completely yet. We're going to see some bouncing around as we move through this, and we can talk about that a little bit more as we go along. But I think that you'd want to just keep putting money away. I had someone ask me, should I stop putting money in right now? I said no, not unless your cash flow has been affected. I mean, it's different if you have a business and all of a sudden you don't have any extra money, or you're trying to pay employees and things like that. But if you're doing everything is sort of normal or status quo for you, keep putting the money away, because the big supermarket down here is Publix. We all go shopping at Publix for our groceries, and or that's the one that most people go to or like. And so I tell people, if stuff's on sale at Publix, you buy more, right? You don't say, well, I'll wait for it to get more expensive and then go buy it, or any other kind of shopping that we do as consumers. So that's what you want to keep doing, is just keep plowing money in, putting money away. It is important, I think, to visit your risk tolerance or revisit your risk tolerance and see, have someone look at that and, it help you measure, what you're doing as far as, are you still in your comfort zone? I mean, there's a point where, the roller coaster becomes too rough and we throw up on our shoes, and that means it's too much for us. So I think there's, and we do something in my firm and our practice called stress testing, where we sort of help talk to you about risk and sort of figure out where you are on the risk spectrum. Are you aggressive investor? Are you conservative? Are you middle of the road? And then we say, okay, well, then you should be comfortable with this, a certain amount of swings in the market. Beyond that, you may get uncomfortable. And so it's good to revisit that, I think, during times like these, and just make sure you're still sort of in between the yellow lines, so to speak, as you're traveling down the path.
So it's funny because I hear you talking like, okay, we're going to do a risk assessment. We're going to do a stress test. What about the people who don't feel that they're on a financial level to go to that extent to have a stress test done and have a risk assessment done, but are still really concerned about what's going on? Is there anything that they need to know?
Sure. You mean if they don't have maybe retirement savings right now or something like that?
Yeah, maybe they don't have a financial advisor. Maybe they don't
Sure.
have retirement savings. Maybe they did lose their job.
Right. Yeah. Well, number one, I would say is you don't have to be super wealthy to have a financial advisor. I mean, we work with people. I have people getting started with $25 a month, kind of thing. So don't ever feel like you don't have enough to ask for help, that kind of thing. But, everybody's situation is different. And so, if you're in a situation now where maybe you've lost your job or you just, you're trying to make ends meet, kind of thing, I think you have to sort of take a step back and look and say, okay, what's the prognosis in the near term? Have I lost my job? And if I have, have I applied for unemployment? The things that I need to do to, keep the lights on, so to speak, at home. And then they should probably be looking and saying, okay, how soon is it realistic for me to maybe get another job? Or if I'm in an industry where, maybe I'm a restaurant owner and things are just shut down right now or what have you, what am I going to do in the near term? And I think that probably someone in that situation just has to start looking at their budget and saying, where can I cut back? Because, we know some bills are going to continue to roll in. And if no income is rolling in, we have to start making some of the hard choices, and that's no fun. And we've all been there at one time or another. I know I have. But at the same time, they say when the going gets tough, the tough get going. And so you've got to, make some hard decisions in the near term. I think the good news with this thing is it won't last forever. I do see, businesses even now trying to find ways and being creative. And how can we make some money? I mean, some of the restaurants here that aren't really serving customers, so to speak, they're selling groceries. I've seen signs out, we're selling milk, we're selling eggs, we're selling paper products because they can still get them through their suppliers and things like that. So
that's a great idea.
They found another way to make money. We'll sell you, beef is X number of dollars per pound or chicken or what have you. And so, maybe those folks that don't want to, wade into the grocery store with, all those other people, right, they can call up this little local restaurant and say, hey, I need some chicken and eggs and bread and milk. And, you're just the only person there showing up to pick it up. So I think people have to get creative, in times like these as well. But, and this, it's where hopefully having some emergency money and an emergency fund is, that's what the money's there for at times like these. And if you don't have that, as we come out of this, I mean, you can't create something out of thin air. I think it's important to start to, create one, start to put one away or put some money away. If you follow Dave Ramsey, he always talks about, even if you don't have much savings, things like that, even if you're in debt, to try to scrape up, maybe $1,000, over time, to where if your car breaks down or something bad happens, you at least don't have to reach for your credit card. You can get it fixed and taken care of. You're not paying interest, things like that. So I think people have to get creative, but people are pretty creative,
Yeah.
People that were, lady here in town has a shoe store. I mean, she's found a way someone's making, masks for her and she's selling those. I mean, so it's some way to keep some money coming in the near term until, hopefully in the next couple of months, things start to ebb a little bit and at least normalize. I don't think this is the new normal for us. I do think there will be some changes longer term, that we'll experience, because of this. But I think most people will, be able to get to back to work in some form or fashion, over the next several months.
So I know in the real estate market, people are really worried. And I got to tell you, here's my prediction for the real estate market. Sure. It's going to explode when this is over, because you've got people trapped in their homes right now. And like it or not, at the end of this, they're going to go, this house is too big, too small, too round, too square. Right. Or they're just going to be like, get me out of this house.
Right. Well, and I would think, I would tend to agree, because I would think there would be some pent up demand as well. People that have been wanting to look, now they can't, right now they might not be able to. I say a couple of realtor friends down here said, there are existing closings and things that were scheduled are happening, but nobody's really looking at new stuff. And of course, the banks are looking at loans 2 and 3 times to make sure that people are still employed and still have the income they did a month and a half ago, maybe when they applied or what have you. But I would think there's got to be some pent up demand, because people, are still going to want to, a lot of us are still gainfully employed. And, and I feel very badly for the people that are in the hospitality industry, restaurants, that have been furloughed, and Disney's big here in this part of the world. And they have lots of employees that are sitting on the sidelines. And, things like that. But there are still a lot of us that are working day to day and still have, revenue coming in and things like that. And, we're blessed, but, there's a lot of those people that have been thinking, maybe I want a different house or want to change or something like that.
Mm-hmm.
So I think, once the people are able to get out and about again, they want to get out and just, go look, kind of thing. And that pent up demand will have to be met. And I know down here, there's really been an undersupply of, of homes. And they're probably same with you because of what happened in 2008. There was just no building for a while. And now there's this, demand that, has really been pretty strong, up until just the last couple of months. And so I would expect that, we would see that come back as things stay. For those folks that, maybe lost a job and, that may reset things for them for a while, but there's still a lot of folks out there that, life is still somewhat normal as far as their income goes. So.
And the good thing is the banks are already putting a plan in place. I actually did a webinar with one of my lenders.
Oh, wow.
Banks are already putting a plan in place on what they're going to do is when this is over, they're going to remove this chunk of time from your job history.
Oh, wow. Wow.
So yeah, they're absolutely putting that in place now so that, because they know we were operating off of low inventory, right?
Right.
So they like us to have that 9-month supply. And right now we were sitting on under a 3-month supply.
Sure.
And so this is going to explode. And I think it's going to definitely bring supply to the marketplace, but it's also going to flood it with more buyers.
Right.
So people are making decisions like this. Yeah. So the banks, they know what's going to happen. And they said, okay, we better have a plan in place where we can take into account that people aren't working because they don't want to work.
Right.
They're working because they couldn't work.
Right. Right.
And so I hope that they do have that emergency fund that you were talking about. Right. So the emergency fund, they say that should be what, 6 or 9 months worth of your bills?
Well, yeah, everybody's can be a little bit different. We typically say 3 to 6 months. Okay. 9 months is better, or even a year. I mean, the more the merrier. When it comes to money, right? It's like the more the merrier. But generally speaking, a rule of thumb, if you look in a textbook or something, we'll say, for a single person or a 1-income family, 6 months, because, if you lost your job, it may take a while to get another one or replace that income. For a dual income family, maybe 3 months, because, if one of you loses your job, the other one's probably still working, that kind of thing. But 3 months is, cutting it close. I think I would like to see people with more, just because, it's going to be 3 months for most people, even if, they said call tomorrow, said, we've got the all clear and everybody go back to work. It's just the economy, they flicked it off like a switch, but it's not going to flick back on like a switch. It's going to be a much slower process to get it. I sent out a weekly newsletter, and this morning I put, we flicked it off like a light switch, but turning it back on is going to be like installing new switches, new lights, and doing some rewiring. The lights are going to come back on, but they're just not going to come back on quickly. So, 3 months could go by easily for a lot of these folks before they see, real income again. And, let's face it, unemployment income isn't really all that much money. I mean, it might pay your rent.
It's not.
You're part of your mortgage, or depending on how much your home is, but it's not going to go much further beyond that.
No. So what are your thoughts or opinions on the stimulus check?
Well, I think it's great that the government did that. I mean, some of us need it more than others, of course. But I think what, people, someone asked me, what should I do with that? Well, I mean, there's, it depends, right? So, if you lost your job and you need the money to pay your bills, then you use it to pay your bills, kind of thing. If you've got some, if you're not in that situation and you've got some, high interest debt or something like that, maybe you pay down a credit card or something like, if you're paying 25-30% on a credit card, pay that down. If you're, you don't have a lot of debt, look around. I said to someone, I said, you get your house in order. And when I say that, I mean, I literally mean that. So plug any holes. So, if there's an issue, say your house, you've been needing to put, repair some things, right? Why wait until it's an emergency? Let's go ahead and cut off head off the emergency and use the money to fix something at home that may need to be repaired or whatever that might be. And, if everything is great and, then invest the money, save it, put it away for a rainy day because, maybe you're not having one now, but you could, in the future, or invest it in your retirement, for the future. If you really just don't need it, put it away, put it in a retirement account, and it'll be there for you, down the road kind of thing. So I think it really just depends on where you are. But I think if you sort of follow that path, you'll find a good place for it.
Are there investment opportunities right now people might want to take advantage of if they're in a position to do so?
Sure, I think so. I mean, things are, across the board are on sale. Not every company, most companies, publicly traded companies, share prices are much lower than they were 3 months ago, right? There's a handful, Amazon and a few others that haven't really missed a beat during this whole thing that have continued to be strong, which just, underlines their strength in the marketplace. So that, may say, hey, longer term, these guys are going to get even stronger. But there's a lot of things that are beaten down right now too. And I think you have to look at sort of what your risk tolerance is and those kinds of things. I've had people call me and say, do I invest in the cruise ship companies? Do I invest in the airlines? And if you have enough appetite for risk, then that may be something, to look at. I think, there will likely be some restructuring that takes place in some of those businesses, and restructuring can include bankruptcy. It doesn't mean the business goes away. Think about General Motors back in 2008, right? I mean, they make a lot of stuff.
I try not to.
Right. Well, exactly. And they're still around, right? But their stock went to zero. The stockholders lost the money, but the debt, holders lost a bunch of money. New stock came out, and if you own that now, it's hanging in there. But at the same time, they'll all have their challenges. So I was talking with someone, and they said, well, the airlines aren't going to cease to exist. And I said, no, they're not going to cease to exist. Would they have to restructure and maybe go through some kind of bankruptcy in order to shed some debt to be viable?
Right.
And if that happens, your stock will evaporate. And they say, oh, I didn't realize how that works. That's how that works. And I said, yeah. So you just have to make sure you have the appetite for risk to do that. And then of course, you don't have to put everything you have in there. So maybe a little bit. And just selectively, there's other opportunities. Disney's not going to go out of business. I mean. And we're not here to say buy this company or that company, but there's some areas that have been beaten up. The energy markets right now. If you turn on the news today, they're talking about how oil is $10, $12 a barrel.
I saw that.
And
it's like at a 20-year low or something like that.
Yeah, and some of that has to do with the futures market and the contract expires this month and the new one comes out next month, that kind of thing. But those companies are beaten up, and the biggest of the big are not going to go away, right? I mean, oil's not going to be free. Gas is not going to ever be free. Electric cars are cool and nice, but most of them are pretty expensive, and we're not all going to drive them tomorrow. They make plastic and a lot of other things out of petroleum. And so, if you have a longer term perspective, I might not buy drilling companies today, because there may not be a lot of drilling, but the biggest of the big, they're not going to evaporate and go away. And so I think what you can do in this kind of environment is look to the highest quality companies in different industries and different business. And you can buy those. And if you have a longer term time horizon, I wouldn't buy them today hoping to sell them next week, because who knows what's going to happen the next couple of weeks or couple of months. But 5-10 years down the road, most things are going to be much higher than they are today. And this feels like a terrible crisis that we're going through because we're in the middle of it, right? But as we move along, I mean, 9/11 was horrible, right? But and especially going through it. But the markets moved higher. The financial crisis in 2008 was horrible, and it was horrible to go through, but the markets moved on beyond it. And that's what's going to happen this time as well. We're going to look back 5 years from now and say it was life-changing for some of us and for most of us. And it was not a fun time to live through, but people are still going to continue to do the things that they want to do on a daily basis.
Yeah.
Get up in the morning, they're going to eat their breakfast, they're going to go to work, they're going to watch TV, they're going to buy computers, they're going to drive their cars, they're going to wear new clothes, they're going to do all those things. And costs are just, prices are going to continue to go up over time, which is why we invest. We want to outpace inflation, right? Things get more expensive. I teach a couple of classes and one here at the local college, and so, if prices didn't go up over time, we just bury our money in the backyard, right? Because it'll always buy the same amount of stuff. But the reality is that's not how it works. Things get more expensive over time, which is why we invest. And, I mean, think about in your industry, in real estate. A lot of my clients are older, and they'll tell me I paid more for my last car than I did for my first house. They bought houses for $5,000 and $10,000, years and years ago, and what kind of house could you get for $5,000 or $10,000 today, right?
It's funny you said that. My father needed a new vehicle. My dad's 75.
Yeah.
And so I said, let's go get a truck. He said, I refuse to spend more money on a vehicle than I spent on my first house.
Right.
And I was like, Dad, that's not fair, because you bought your first house when they were nothing,
Right. Right.
So this was like a great debate, but
Yeah.
it's interesting when you hear that generation talk about that because they spent so much less than
Oh
we're
yeah.
ever going to spend on these things.
Oh yeah. Yeah.
Yeah, I remember my mom, and God rest her soul, she used to make fun of me when I bought my first property because she used to, because her interest rate when she got her house was like 2.9.
Oh yeah.
And this was in like 2006 or 2007 or something, when it was like 10% or something. She's
Oh.
like, ooh, ooh, I was like, Mom, it's kind of not funny.
Right, right. Oh, I know. Well, and now think about interest rates. You talked about demand being strong. I mean,
Yeah.
I know rates, they sort of dipped and then popped back up a little bit, but historically they're still at all-time lows.
Oh,
I mean, you can get a mortgage. You probably know better than I do, but I'm 3 to 4%, I'm guessing,
yes. That's
20,
exactly right.
15 to 30 years, somewhere in there.
Yeah.
And they got down as low as, 2.75 here for a little bit,
Yes, they did.
right before things got crazy. And so, I mean, you can't rent for what you can buy in a lot of
Really
cases. Rent's
can't.
been going up. I have clients that own real estate and rentals and things like that, and they've said that at least in our area that affordable housing is disappearing. Rents are going up because of the
Yep.
demand, and they're not building as much multifamily apartment type stuff, and in a lot of cases the mortgage is cheaper than renting.
And it really is. And I have people that I actually just closed on in February that had that exact scenario. Their mortgage payment ended up being $100 less a month than their rent
Right,
was,
right. Isn't
because
that
the
amazing?
rates are just fantastic right now.
Yeah, and so of course, I mean, there are some people who maybe here temporarily or what have you that buying may not make sense for, but for most folks, if you're a gentleman, we were talking about insurance one day, and there's different types of insurance, life insurance policies and things like that,
Yeah.
and term policies, kind of like renting a policy, and then there's these cash value policies, and there's a great debate about which are better, but the term are always cheaper, but he said, Nick, if you're going to rent a house for 30 years, you probably ought to buy it. You know what I mean? And, meaning like, if you're going to have a life insurance policy for 30 years, maybe you ought to have one that'll last, the rest of your life. And it's the same, with renting and buying a home. I mean, if you're going to rent someplace for a long, long period of time, you're probably better off owning because you're at least
We
putting some
actually have a question here from Robin.
great.
Robin is asking for her stimulus check. Is it better to put that towards just paying down your whole mortgage, or is it better to take that to set yourself up for biweekly payments?
Well, the biweekly payments, of course, will pay your mortgage down faster over time. And I think you probably know the timing better than I do, but I think it cuts like 7 or 8 years off of your mortgage
Yeah.
if you do that. And so I would probably use that to set me up for that versus, a one-time pay down of, I don't know how much you got, but if you're a single person, you got 1,200. If you're married, you got 24. And if you've got a bunch of kids, you got a little extra. If you got a bunch of kids, you probably need that extra,
Oh,
You may just need it for cocktails or something if you're homeschooling them. So, but,
that's to
but
help with that increased need of the liquor store.
that's right. That's right. They're definitely essential, I think, especially when you go to
Oh,
homeschool your kids. But new respect for teachers. But
yeah.
but I would probably use it. Think looking longer term rather than just cut down maybe one payment. I would set myself up for the biweekly thing and then really cut some time off, and you'll save a lot of interest in the long run doing that.
Yeah. Well, Robin, I hope you heard that. If you missed it, just go ahead and watch the playback. I'll make sure this hits the YouTube channel. I want to delve in a little bit about these forbearances. I'm not hearing good things here. What can you share with us? What's your opinion from a financial advisor's point of view about people taking advantage of a forbearance, especially if they don't need to?
Right. If you don't need to, don't do it. I mean, that at the end of the day, there's no free lunch, right? And they say, you can get free cheese in a mousetrap, right? But you know what the consequences are. And so most of these big businesses, I recently, paid my vehicle off, and I went online and was trying to, well, first I called, trying to do that in the midst of all this. And I was just inundated with messages. You don't have to pay, and you can take 3 months off. And finally I got somebody said, listen, no, I just want to pay the thing off. I'm trying to be
Right.
done
I just
with
want
it.
to pay you.
And I'm the opposite, I guess, of what everybody else right now. But they want to earn interest, and they do realize they don't want to damage people's credit, right? Because if you lost your job because of a government sort of, imposed shutdown, it's not fair to damage people's credit. So if you're in a situation where you don't have any money coming in and you can't pay your bills, well then, yeah, don't damage your credit, take the forbearance. But if you're, what's going to happen though is that money's still due. It's not a gift. and they're going to tack it back onto the back end. You're still going to accrue interest, so you're going to pay additional interest.
Yes.
Depending on the lender, that kind of thing. And if you don't need it, then don't take it, because you're costing yourself extra money. And you have to find out from each lender, when this money that you've skipped, let's say this month, when it's due. Do they
When
just
is that
tack it
going
onto
to
the
be
back end, or in 3 months you're gonna have to make an extra payment? And there's been some question, with some of those, when that forbearance has to be repaid. And so
Yeah.
I would definitely look at that. But if you don't need it, don't take it, because it's just going to cost you extra interest. And if you're looking to throw money away, I will send you some deposit slips from my bank account, and you can just send it to me.
You're more than welcome to throw it there, right?
Right.
Because
right.
if I understand, the difference, if I understand this correctly, a forbearance isn't a deferment. You didn't defer that payment to the end of your loan, which is not wise to do if you don't need to.
Right.
You're just kind of kicking that can down the road, and then it's like a balloon payment. It could all be due at the same time.
Right. That's right. And that's what I've heard. And, I haven't encountered it, personally yet. I haven't
Not
had
yet.
a client that's, encountered, but the last thing that you want to do is you don't have the money. And now all of a sudden, instead of, one payment, that you thought you had to make, you have to make 2 or 3. Where's that money going to come from? And then at that point in time, is that going to damage your credit? And it's hard to recover from, a nick on your credit.
Especially on their mortgage.
Oh yeah. It takes a while. I mean,
you might be able to recover from a nick on a credit card, but the mortgage really, really sticks with you.
Oh yeah.
Where I came out of the auto industry about 15 years, I was a financial manager for about 10 of those years. So I spent a lot of time working with credit, and I know that they put a much heavier weight sitting on how you performed with your mortgage over how you performed with your credit cards.
Sure.
If you don't have to nick your mortgage, don't nick your mortgage.
I'll tell you a quick story. I mean, I was divorced many years ago, and was in the process of, buying another home for myself. And my ex-wife was had supposed to refinance the mortgage, kind of thing into her name. And she was working on that, but something had happened and she got behind on a payment, and I didn't even know, And I was in the process of applying for a mortgage, and the lady said, "Well, your last payment was late." I said, "What do you mean it was late?" I didn't know I wasn't making the payments, right?
Right.
And so, of course, I called and I helped her get it resolved. But what it ended up doing for me is she said, "We can still do the loan, but you're gonna have to put a little extra money down." And fortunately, I had it to do at that point in time. This was back in 2010. But had I not had it, what would I have done?
Did they increase your interest rate any?
It did go up a little bit. Yeah, it did go up a little bit. Yeah.
Yeah, and a quarter point on a compounded mortgage loan over 30 years.
Yeah,
that's a lot of money.
Yeah.
So that was your ex-wife's little farewell, right?
Right. Yeah. And so then, I lived in the house for, I don't know, a while, and then we moved and that kind of thing. And one thing I will say, since we're talking about mortgages, if they can do a 15-year instead of a 30, people think that payments are double or what have you. They're really not. Someone like you can show them, you're going to pay a little bit extra, but you're going to pay it off in half the time. And then when you show them how much interest they save.
It's funny. That's conversations I have with every single one of my clients. Is I make sure to stop and I'm like, listen, talk to your lender and have them show you the difference on a 15-year mortgage versus a 30-year mortgage. Because usually on the 15, the interest rate is a little lower.
Right.
You're absolutely right. The payment isn't thousands more. It's literally like $150, $200 more. Yeah. And you're paying it off in half the time. Right. And you're saving, I think it's like $150 or something $1,000 in interest. Like, it's a ridiculous amount.
Oh yeah. It's a lot of money. Yeah. I mean, I went through in the class that I teach, I showed them just an example, and it was maybe 25% more payment or something. But I mean, and I forget, maybe we used $150,000 or $200,000 as a
right.
But it was, I mean, it cut $100,000 or something of interest.
I mean, it's a substantial savings. Yeah. Like $100,000 that you don't have to spend out in this area, you can spend on so many other areas.
Oh yeah,
So much. If someone had told me that when I bought my first property, that would have been bigger. So it's definitely advice that I try to give everybody I work with. Like, just ask the question. It's not going to hurt to ask. Your lender will be more than happy to provide like an itemization for you, an amortization. Yeah.
Well, and then to be done, if you're 30 or 40 years old, to be done at, 45 or 55 years old, not have to make your mortgage done, rather than you're 60 and still making mortgage payments.
Right. And I mean, it does, like, Just try to do that in a state where the property taxes don't equate to a second mortgage payment every
Right,
month.
that's right. Yeah. Fortunately, where we are in Florida, they're not horrible. Although we lived in the county and then moved into the city and they doubled, and I moved 2 miles. I mean, it was just crazy. And all I got for that was, a bigger recycle bin. So I don't know.
Uh, we're close to New Jersey, and I swear New Jersey's property taxes, I don't know how anybody can afford to live
Oh,
there.
we had some friends that lived there, yeah, and their taxes were,
Yeah.
someone's salary in some cases. So,
And you literally come here, and I mean, you're like 20 minutes away, and my property taxes are less than $1,500 a year.
oh wow, that's great. That's
Like,
great.
we pay no sales tax here in Delaware. Like, it's amazing. It's
Oh,
like,
that's great. Wow.
yeah, I got to tell you, once I moved here, I came out of Philadelphia.
Yeah.
I came out of 8% sales tax
Oh my gosh.
to no sales tax. Like,
Wow.
what a transition that was.
Oh, that's huge.
Yeah, yeah. Like, now, if I go to Philly to visit anybody, I won't even go to the dollar store because it's $1.08.
Oh, I know, right? Yeah. Well, here it's 7, so I can sympathize. Wow, 0 is
Yeah.
great.
Like, I'm like, yeah, I'm not doing that.
You have to maybe start taking summer vacations up there to buy stuff, all
Yeah.
from all your shopping.
You would love it around the holidays around here because you just see trucks coming into Delaware and they do all their shopping in the mall over here. And then you just see them leave. Like, whenever
What?
anybody needs furniture, you see Pennsylvania.
Car dealers got to love it too. They're probably
Yeah.
flooding in from other areas to buy cars there.
Well, actually, so if you purchase a car, it doesn't matter where you buy the car.
Oh, okay.
You pay the taxes and registration fees on where you live.
Oh, okay. I
Yeah,
got you.
yeah. So they certainly do try to
They
come,
figured
and then
it
they're
out
like,
then, yeah.
"Oh, wah wah." It's like,
Yeah.
nah, that doesn't help. But
You have to rent a place for a month. It still might be cheaper.
right, right. So you had mentioned something about they were adding a $4 trillion to the economy.
Right. Right.
Let's talk about that for a minute. Help me.
Sure. Well, the Federal Reserve basically, when the market started to sort of roll over back in late February, early March, and it was apparent that, businesses were just going to have their revenue cut off, right?
Yeah.
And so, I mean, we've gone through downturns and recessions where revenue slows down and things like that, but we've not, and that's certainly not happening in every industry, but in some industries, the revenue is just, the spigot has been turned off. There's no money coming out of the other end. And so we've not had that experience, before. And so the concern became, obviously corporate earnings, are going to decline. Stock prices start to go down. The market was down, 30% or plus at one point in time. But the bigger question, becomes this, these businesses all have loans out there, just like people have mortgages, businesses have loans.
Yeah.
And if they don't have any revenue, are they going to default on those loans? And then the banks that are stuck holding the loans, what happens to them? And it becomes sort of a cascade effect that, sort of flows downhill. It can become a real financial disaster if there's not someone there to backstop it. So basically, and then of course, all these people without, income coming in as individuals, the stimulus checks, things like that. So the first round, they authorized about $2 trillion, which includes this money that, everybody is getting, or most people are getting in the form of stimulus checks. It includes some, the loans, the PPL loans and things like that for business owners that you're hearing about, which the fund is, gone dry, and they're trying to replenish it with another $350 billion. But then the government is buying, had to start, not the government, the Fed started to step in, Federal Reserve, and buying mortgage-backed securities and things like that, because for a very short period of time, the banks just, weren't, because most people people may or may not realize, bank will lend you money, on your mortgage, but they pull those mortgages together and they sell them off to, someone else.
Right.
And, as bonds, and then, people buy those bonds and, for an income or investments and things like that. So what happens is if the loans aren't getting paid, ultimately the investors downstream start to lose money, and it causes other problems. So the Federal Reserve stepped in and started buying mortgage-backed securities, commercial mortgage-backed securities. In order to do that, they had to sort of create some money out of thin air. And so that was about $2 trillion. And then they realized that there are, businesses like the airlines and others that, could collapse if they don't have any revenue, and are vital to the infrastructure, of the economy and the country and the world in a lot of cases. And so they authorized another, storming here, so you may hear the thunder. They authorized another $2 trillion, on top of that to help, these other businesses and to make loans and things like that. And so that's $4 trillion. Basically, you can think of it as they printed the money for this. And we may not be done yet. I mean, they've
Right.
acted swiftly, much faster than they did in 2008. In
Yeah.
2008, there was some denial that there was actually even an issue. And
Right.
then when it started to sort of hit the fan, then they started to act, but it, really wasn't as fast, and politically there was not a lot of support. This time around, it really is nobody's fault, right? I mean, nobody created
Right.
this virus, out of thin air, or hopefully at least not here.
Well, wait a minute. Wait a minute. I believe this is somebody was eating bats. Why are you eating
Right,
bats?
right, exactly. And so that, this virus is no one's fault. And so, basically, they said, there's more political support to say, let's help the American people, American business, so that, when this does blow through and settles down, we can get back to a normal way of life. And so they acted really quickly. They cut interest rates overnight to zero.
Zero.
They authorized, all this money to backstop American business and individuals. And hopefully, if this doesn't last too long, that will be enough. If it starts to drag on, then they'll probably have to go back to the well for more. And the issue with that is longer term, when you pump a bunch of extra money into the economy that wasn't there before. In the near term, it plugs the hole, and it's like a Band-Aid, and kind of helps us move along. But then if it's all that money still there sort of sloshing around, it can create inflation, start to drive prices up. And the Federal Reserve has, this dual mandate: one, to maintain price stability, which is to keep inflation in check, which is the costs going up over time. And then, to keep the full employment, to keep people, employed, and keep unemployment as low as they can. And they were doing a pretty good job of that beforehand. I mean, unemployment was at like 3%, the lowest we'd seen in 50 years or something.
Yeah.
And inflation wasn't terrible. So we're going to have to really pay attention and kind of see what happens. They're calling it modern monetary theory, where you just print money and fix these problems. And it's unknown at this point in time, what the repercussions of that are going to be. There are always unintended consequences when these kinds of things happen.
For every action, there's an equal reaction, right?
That's right. And we just don't know until we get some more time underneath our, belts, how the economy is going to behave. It's one of those things, as having children, things like that, and having to, hopefully live another 40 years or so. I wonder what it's going to do, to the debt and the country, that kind of stuff longer term, because we already have $23 trillion of debt. And then you had Medicare. The enormity
of that number is just overwhelming.
Yeah. And you had Medicare and Social Security to that. And there's a lot of unfunded liabilities, that we have here, and debt as well. So, it makes me wonder what taxes are going to look like longer term and those kinds of things. But, I'm just speculating. Nobody really knows. I mean, we thought we were going to get runaway inflation after all the money they sort of printed back in 2008, and we didn't. So, and so it's possible that, this time around will be the same way. Well, we hope it is. And, if not, owning some hard assets like real estate is good, because they keep up well with inflation, but otherwise, we really just don't know. And it's, I guess the thing that levels the playing field somewhat is it's not just the US that's having to print money and do these things, it's the whole world. I mean, globally, exactly. The economy's been, started in China, and it's sort of reverberated through the rest of the globe. And, in Japan. And so in the US, not only are they buying, the Fed's buying treasury bonds, keep interest rates low, mortgage securities, commercial mortgage securities, to keep the, loan markets going. They've even stepped in, they're buying junk bonds, high yield bonds, corporate bonds, and high yield bonds, which are companies that are sort of lower on the credit quality spectrum. So think of it, individuals, getting a loan for a house. If your credit is a certain tier, you get the highest rate, and if you're sort of subprime credit, you have to pay a lot more interest. Well, in the, out in the corporate world, if you have lower credit rating, you have to pay, higher interest and things like that. So a lot of these energy companies, which is one of the concerns about oil right now, being so low, they can make money at $60 and $70 oil if it costs $30 to bring the oil out of the ground, right? But if oil is only $20 and it costs $30 to bring it out of the ground, and it's a capital intensive business, a lot of companies borrow a lot of money to do that. All of a sudden, they're not making money, they're losing money, and those industries can become shaky. So the government's basically, buying up high yield and junk bonds, and there's, talks of, at some point, would they buy stocks, in the open market if the stock market got really crazy again? They did it in Japan, and Japan, their central bank or equivalent of the Federal Reserve here stepped into the market and bought stocks.
Okay.
So I guess if you're going to have somebody, with their finger on the scale, so to speak, the central bank is the one that you want because they have unlimited resources because they can just print more money.
Okay. So I just want to take a minute for those who just joined in. I see Kelly and Chasten and Jonathan and Kristen and Paul. I see you guys all came in. If you have any questions, Nick's here. He's answering questions. I'm going to introduce him again real quick. Nick is with Guardian Wealth Management out of Florida. Even though he is in Florida, he can work with anybody here in Delaware who's interested in getting some information from him. So I'm going to share my screen. This is his website. If you have any questions, you just want to go here. It's guardianwealth.net. His phone number is up here in the corner. And if you go to his about page, you will find him, and his information is right here, including his personal email. So you can email him directly with any information that you need from him. I'm sure he's has no problem doing virtual consultations.
No, we've gotten good at that now.
Yeah. Haven't we all? Yeah.
It's amazing how this has changed so many things, though. I think I often wonder, like the commercial office,
I think that's a game changer.
Real estate. Yeah. Because, if you've got employees or you thought, well, I got to have an office for this or that, after you've lived through this and been sort of forced to deal with it. So it's not terrible. It's not so bad. And, I can still get some work done. And do I need that big office, or do I need that? You may, but you may not need as much space and, that kind of stuff as well. So
it's funny, we were just talking about what that is going to look like, because to be honest, companies have been fighting working from home because they always worried that productivity would drop low. But I think it's been just the opposite. Productivity hasn't dropped. In fact, it might have increased a little, and they can save money on overhead. So I think this is going to start opening the gates for those conversations to be revisited. And maybe you're going to have a lot of people working from home.
Right. Oh, definitely possible. My wife has been working from home a few days a week, and she's busy. She works all day long, kind of that kind of thing. But at the same time, I know they're still getting a lot of work done. And I've taken a few days and things like that and work from home. And I come to the office to escape now. It's quieter. It's more quiet at home than it is at the office than it is at home, as far as people milling about, kind of thing.
Right.
But at the same time, I think there will be, some changes from this, longer term, as we learn that we can be more efficient and productive and use technology. And some of these technology companies have done very well. When you look at, Zoom, like we're using, and, others, it's amazing how well, they've just filled the gap in the need.
I think Zoom went to like $120 something a share.
Oh yeah. It went up a lot. Yeah.
It like jumped right out of the stratosphere. I was like, whoa.
Yeah.
I would like to go back earlier. You had said something about that you don't have to spend a lot of money on stocks. It's funny, in 2008, somewhere in that time frame, American Airlines dropped onto the penny stock.
Oh, sure.
I didn't have any stocks at the time, and I didn't have a lot of money to put at it, but I said to myself, there's no way they're letting this airline go out of business. It's not going to happen. So I think I paid 96 cents a share.
Wow.
So I had $400, and I said to myself, because you do your risk assessment, right?
Oh, that's right.
If I was going to lose money right now, how much could I lose where it wouldn't really jeopardize everything else I got going on?
Right.
And so I pulled $400, and I said, I could lose this. Would it hurt? Yeah, it always hurts to lose money, but would it break me? No, it wouldn't financially break me.
Right.
So I took that $400 and I put it in a penny stock. Well, when I tell you, next thing I know, it's worth thousands.
Oh yeah.
I was shocked. I expected maybe 1,200, 1,300. No.
Yeah.
Thousands.
Oh yeah.
So what can you tell us about, is there certain stocks people might want to look for right now if they do hit the penny stocks?
Well, I would look for, industries that are going to recover, or things that are vital to the economy or vital to the, their infrastructure. So airlines are one, certainly.
Yeah.
Airlines are one. I've had people calling, they were interested in the cruise ship companies. They're not necessarily vital, but they may not go away, that kind of thing.
Right.
Some of the energy companies, they're not going to go away. They're going to be, beaten down. And so it's just, find companies that don't have too much debt on their books, because debt can be a killer if they have too much. That's what can cause bankruptcies and things like that. But if they're not overwhelmed with debt, and the price is just beaten down because everything else is beaten down. I mean, Ford got beaten down to like $1 a share back then.
Yes, it did.
They went back up, and now of course they're beaten back down again right now because people aren't running out to buy cars and things like that today either. Like among a lot of other things. But those businesses that are were very strong businesses before this. Well, once the economic machine is turned back on, will probably be strong businesses again.
Yeah, I think it's definitely going to happen. Well, is there any final thoughts, or is there any additional information you think people should have as we, finish to go through this kind of turbulence, I'm going to call it?
Sure. Well, I would say just, still be cautious and conservative a little bit. It's nice to hear the president and the governors come back on and say, we're looking at, sort of ramping things back up. It may not happen as fast as they would like. I mean, the concern is that, we open things back up and the illness, the virus spreads some more, and then they have to shut it back down. And that's what they want to avoid completely. So I think they'll start things up a little slower just to sort of make sure. They talked about sort of a 3-phase process. So I would just, stay somewhat cautious and make sure you've got some dry powder, or, money, when I say dry powder, money, yeah, that's right. that you said that you're, not, don't spend all your money thinking you're going back to work tomorrow kind of thing, because it could take a little bit longer than we think. And then of course, just being prudent, like, with everything else, being cautious, wiping stuff down with the Lysol wipes, and, not going into big crowded areas if you don't have to, and things like that. And I tend to be a little bit of an introvert when I'm away from work, because I talk to people all day long. And so my wife says, "You're just loving this, aren't you? Because, you can just stay at home and not talk to anybody." I said, "Well, it's not terrible,
It's not hateful."
Yeah. But I think the main thing that I would do is just, just still stay vigilant. With my health, of course, and with my money, I would still, stay somewhat cautious. Warren Buffett says when the tide goes out, you can see who's been swimming naked. And so the people that, just don't have any savings and are living, payment to payment or paycheck to paycheck, this is when they can get hurt. And so, just don't think that, it'll be over next month and everything's going to go right back to the way it was, because I don't think that's reality either. I think we'll get back there, but I think it's going to take a little bit longer than a lot of people, realize. Now, the stock market may recover ahead of that because it tries to look ahead, but there's no guarantee that that's going to happen. I think, we're going to see it. There's really like 3 waves of this thing. There's the first wave is just the virus itself sort of coming through, and then, sort of the stock market's reaction to that. And then ultimately, I think the third wave is sort of the economy's reaction to these slowdowns. And because it takes a while for some of these things to sort of cascade, we may not see the full repercussions until, later in the summer of, earnings, be declining and things like that. So, but hopefully by the fall, we're moving back forward again. And if they're able to develop a vaccine, and so that this doesn't come back like the flu does every year, kind of thing, then hopefully we'll be better off. And then of course we've got elections this year, and elections always create a little bit of turmoil and just some uncertainty, because the markets don't like uncertainty. And so we'll see what happens, come November, but there'll probably be a little bit of uncertainty around that. And then things hopefully can settle down. Hopefully 2020 is one of those years, we get through and just put it behind us.
Right. And the good thing is we did go through this globally, right? This is a lesson for everybody all at the same time.
That's right. And the U.S. has done more than anybody else to try to to fix it. We've acted the fastest. And I think there's a couple of things that I was just going to leave you with. I think longer term, that I think we'll see structurally some changes. The first one, I think we're going to start to see. I made just a couple of notes here. So I think we'll start to see the supply chain, move back to the USA, from China somewhat, because of
that would be phenomenal.
We'll see more of maybe an infrastructure, boom because of that. I think we'll see, as we talked about, a little bit of deurbanization. From cities to suburbs, because the areas that got hit the hardest, that people live right on top of each other, New York cities of the world, versus more suburb areas like where you live and maybe I live. It's a little more spread out, and we're not quite as on top of each other. Working from home, I think, is definitely a new era, a new wave. I think we'll see, and then finally, I think we'll see just more of a patriotic standpoint, more buy USA, kind of stuff. I think you're going to
Definitely.
I think you're going to see that, and I think you'll see the whole supply chain moving around. There will be diversification of the supply chain because businesses that needed stuff from China, they just couldn't get it. Had to slow down or shut down. Now they're going to have 2 or 3 options, and maybe one of them's back here in the U.S. To where if something like this happens again, and it's inevitable, it will happen again at some point, hopefully not anytime soon, that they can continue to operate and do the things that they need to do. And I think it'll come up as, politically as national security issues. I think they're going to say there's certain things that we need to be able to manufacture here. And the current administration certainly is a fan of those kinds of things. So I think, that's politically some stuff that we'll see as we move forward as well.
Yeah, I think you're absolutely right. And honestly, I think it's a good idea. Let's start the factories back up.
Oh, absolutely. Yeah.
We had our unemployment rate was at an all-time low. I think it was 3%, like you said.
Sure.
And let's face it. I was looking at unemployment the other day. I think it was only at 9-point-something%. So it's still not out of control. It's higher than it's been in the last couple of years. But I think when I looked back in the last administration, it was in 9%.
Oh yeah, that's right. And this is for a different reason. Hopefully some of it's just temporary, so hopefully half of that goes back to work in the short order, kind of
everybody I know is waiting for the restaurants to open.
Right. Oh yeah. Yeah.
Everybody I know. And everybody I know is saying the same thing. I'm going to give my server the biggest tip because they have missed them,
Oh yeah. Yeah.
I think that hopefully they're going to, while they're going through those pains right now, I foresee a quick recovery for them based on what I'm hearing from my friends,
Oh yeah. Oh, that's right. That's right. The same with the barbers and the beauticians and those guys too. People that cutting their own hair, dyeing their own hair, and all that stuff. And that's
every woman I know has $200 put aside for the minute it's open.
Yeah, that's right. They're gonna have a backlog. Yeah.
We're on the phones right now with our salon owners. Can I get my appointment in now? That the minute you open, I'm the first one.
That's right. Yeah.
I feel like there's going to be a bidding war for the first appointment to the salon.
They'll be able to have surge pricing like Uber. That's right.
And the crazy thing is, nobody's going to complain about that. Everybody's going to go.
No, they'll be happy to pay it.
Whatever you want, just get me in, So, but I think, once this is over and those people do go back to work, if we pump up the factories and we start making those things at home, that wouldn't have slowed us down as horribly as it has because we didn't make it here.
Right.
Our unemployment rate could go 1% or lower. That would be amazing for our country.
Yeah, I think you're right. I think things, if we can just manufacture things here, and it costs a little more and that kind of thing, but keep America working, and it's nice to have cheap stuff and it's to be as cheap as you can, but this just magnifies the issue of it's still on the other side of the world, and if you can't get it, then you're out of business. I mean, it doesn't work.
Right. And let's face it, it costs a little bit more to be made in America for a couple of reasons. The biggest one is it's not being made in a sweatshop where they've got child labor.
That's right. And there's
quality control. We don't endorse that behavior in the world either.
Right. And quality control, that's
quality control.
It's not just, taking somebody's word for it. Our standards are a little tougher, hopefully here than in other places. And so, whatever they're manufacturing, hopefully there's, somebody coming through periodically and say, hey, we want this to be right. And he's got to be in clean conditions and, all those kinds of things as well.
Plus, it's little Johnny. Little Johnny's parents have a job because you're buying that American-made product. And so they have a job and little Johnny has dinner and everybody's got medical coverage.
That's right. That's right. Yeah, that's exactly right.
So, that's always a good thing. Okay, I'm just going to check one last time for any questions. I did drop all Nick's information in the comments, and I'm going to go ahead and make sure that it's on the page and the video will go up. I'll make sure all his information is available. He's willing to answer any questions you may have. He is located in Florida, but is going to be doing virtual consultations if you're looking to have one done. Nick, I really appreciate you coming and sharing this information with us today.
Oh, you're very welcome. I'm happy to help. And, if there's anything we can do, people have questions, like I said, put them in the comments. I'll do my best to answer them. You've got my email, you've got our phone number. We'll do whatever we can to help you out. Just, give you some advice if you need it. So.
Yeah, I truly appreciate that. I'm Carol with Remax. I'm a member of Team First Day Properties. You can follow me on TikTok, Instagram, LinkedIn, YouTube, Carol with Remax. I'm Carol with Remax everywhere. We're doing our best to just bring as much information as we can for the questions that I know we're all asking. So on that note, we're going to go ahead and leave. Thanks for joining us, Nick. Have a great day, everybody.
You're welcome. You too. Take care. Bye-bye.
Bye.